Welcome, curious minds, to another deep dive. Today, we're plunging into the intricate world of Infosys, a global IT services powerhouse.
That's right. Our mission today really is to give you a fast track to being well-informed about this, well, pretty complex company.
So we'll unpack the financials, right?
Yeah.
For 2015 to 2025.
Exactly. We'll look at that journey, dissect the current market signals, and try to assess its true value. It's an interesting mix,
How so?
Well, you've got strong fundamentals, real leadership in AI, strategically speaking, but then you also see this recent growth slowdown, valuation challenges too, and, well, there's that history of controversies.
Okay, let's set the stage a bit more. Infosys, they're a global leader in digital services, consulting, operating in, 59 countries?
59 countries, and nearly $19.3 billion in revenue for fiscal 25. They're really pushing AI integration too.
Yeah, I saw that, like reimagining document workflows or using generative AI to cut process downtime pretty significantly, over 90% in some cases.
Precisely. And their market standing is, well, significant. Third largest IT services company globally by market cap. That's around 75 to $78 billion.
Big player. And a strong brand reputation, too. Top 3 IT services brand globally, most ethical company lists.
Yep, they tick those boxes. And think about this. They started with just $250 back in 1981.
Wow, just $250.
And they, became the first Indian company listed on NASDAQ in 99. Quite a story.
So, okay, let's talk performance. That last decade, financially speaking, revenue nearly doubled.
It did. From about $9.5 billion fiscal 16 up to over $19 billion by 25. Remarkable growth, really.
But there's always a but, isn't there?
Yeah. Here's where it gets more nuanced. That year-over-year growth, it's moderated significantly.
How much are we talking?
We saw over 20% growth back in fiscal 22 now.
Yeah.
Down under 4% for fiscal 25.
Oof. That's quite a slowdown. Signals a mature market, maybe. Pressure to innovate.
Absolutely. And profitability. Net income has increased over the decade, but it's kind of plateaued recently. Suggests maybe some margin pressure.
Right. The net profit margin went from over 24% down to around 16%.
Exactly. But on the upside, their balance sheet is exceptionally strong, virtually debt-free. That 0.00 debt to equity, that gives them immense financial resilience.
Can't argue with that. And the cash flow.
Robust. Operating cash flow surge. If you convert the figures, it went from roughly maybe $100 million back in 2015 to over $400 million by 2025. Huge increase.
And that strong cash flow lets them fund their own growth, plus return value to shareholders, right? Dividends, buybacks.
Very shareholder-friendly. Consistent growing dividends up from about 19 cents in 2015 to nearly 59 cents in 2025. Plus those bonus issues and buybacks you mentioned.
Okay, so that's the financial backbone. How's the market reacting now? The technicals.
Right. Let's look at the stock signals. The current price, mid-July 2025, around $18.19 on the NYSE. It's actually closer to its 52-week low than its high.
Low being around $15.83, high $23.63.
Correct. And the moving averages, those indicators tracking price trends, 5-day, 50-day, 200-day, they're all signaling sell. Points to a prevailing bearish trend.
Bearish. But wait, isn't there some divergence? What about momentum indicators?
Good point. That's what's fascinating here. Things like Mantha D and ADX, which gauge trend strength and direction. They're signaling buy or neutral.
So sell signals from averages, but buy or neutral from momentum suggests maybe the selling pressure is easing, or we're near a bottom.
Could be. It's a mixed picture for sure. And some chart patterns might even hint at bullish reversals. Things like a cup and handle or maybe a falling wedge. Traders watch for those.
Okay, a mixed bag on the technicals. Now let's put on our value Mr. Hat, Benjamin Graham.
Right. If we apply his classic intrinsic value formula, using the FY 2025 EPS of 76 cents and let's say a conservative 5% growth rate, the value comes out around $12.60.
$12.60. And the stricter Graham number?
Even lower, around $6.73.
So compared to the current market price of about $18.19, both Graham methods suggest it's, overvalued.
By those strict historical earnings-based principles, yes. But, this discrepancy kind of highlights something important.
Which is?
The market's likely pricing in a premium for future growth, right? And those intangible assets, like their leadership in AI, Graham's models don't really capture that future potential fully.
Makes sense. Okay, let's quickly recap the pros and cons then. Strengths.
Debt-free, strong cash flow, shareholder-friendly. That leadership in AI and digital transformation is key. Strong global brand, competitive delivery.
And the weaknesses or cons?
That moderating revenue growth we talked about, signs of margin pressure, overvalued by those conservative Graham metrics, the mixed technical signals, and, well, the history of controversies.
Right. We can't ignore those historical challenges. They've faced recurring issues, visa and tax stuff in the U.S.
Yeah, like that $34 million settlement back in 2013 impacts reputation in a key market, doesn't it?
Definitely. And then there were those technical glitches with major Indian government portals, the income tax portal.
2021, 2022 caused a lot of public frustration, government scrutiny. And remember the whistleblower allegations in 2019.
Yeah, big stock drop, market cap erosion, highlighted governance concerns.
Swift, $6 billion wiped off market cap, 16% stock slump in a day. Or more recently, you hear discussions about work culture. The 70-hour work week comment, hiring issues. Again, just important to note, we're reporting these impartially as they appear in the sources.
Understood. So, wrapping this up, Infosys seems like a fundamentally strong company. Resilient business model, clear strategy, especially with AI.
True, but it also faces real challenges, re-accelerating growth, managing those margins, and navigating that history, those reputational issues.
So the final thought for you, our listener.
Yeah, how do you weigh it all? That proven financial stability and AI leadership against the recent growth slowdown and those recurring historical controversies. When you think about its long-term potential, what stands out most to you? What's your next deep dive question?